Now, let me quote from Nikolai Lenin, what is to be done, and talk briefly about some proposals and where I think we should be headed, given the diagnosis that I've just laid out to you. The question I'm putting up there is why no mention of Fannie and Freddie in Dodd-Frank? The Dodd-Frank bill is the massive, sweeping financial reform bill that was passed middle of last year, and it did not even mention Fannie and Freddie. So I'm going to take a swipe at another book that's been a bestseller that I can spare you the trouble of reading. It's called All the Devils Are Here. It's by Joe Nocera, who's a New York Times financial columnist, and Bethany McLean, who's a Vanity Fair financial journalist. And they explain why there was no mention of Fannie and Freddie in Dodd-Frank. And by the way, this is from the second to last paragraph of their book, where we're supposed to finally get the wisdom of all that they've learned from All the Devils Are Here, which has to do with the bubble. The reason, they explain, the legislation makes no mention of the GSEs, the government-sponsored enterprises, is that nobody can figure out what to do. That's my italics. Can we ever have a truly private sector market for mortgage securitization, or will it always require government? Well, securitization is, of course, what Fannie and Freddie did. They bought up mortgages in the secondary market that were originated. In the spring, Joe Nocera and McLean go on to say, the Treasury Department requested public input on the re-engineering of the mortgage system and the reform of the GSEs. In response, Treasury got more than 570 comment letters. There is no consensus. Well, you know, if the USDA, Department of Agriculture, were to ask, for letters, comment letters on what to do about subsidizing rich farmers, I dare say there would be no consensus. This is the nature of the crony capitalist system. An awful lot of rich farmers and their acolytes and lobbyists and senators from the farming states would make sure that there were lots of comment letters pointing out how important it is that we subsidize, that the taxpayer subsidize the sugar interests. This is sort of like the out-to-lunch, completely eclectic view of the world that you read in books like this. Everybody's clueless. We know that all the devils are here, but we don't know what to do, and that's why the legislators didn't touch Fannie and Freddie. Well, probably they didn't touch Fannie and Freddie partly because Barney Frank, who was the co-author of that bill, has only lately recanted. By the way, it is remarkable that Barney Frank, Democrat from Massachusetts, who was one of the big guns and big guardian angels of Fannie and Freddie, has actually begun to rethink what happened. But he didn't want to touch Fannie and Freddie in that bill, didn't want to embarrass himself. If you look at the legislation, the Financial Crisis Commission, if you've seen a movie called Serpico from many years ago, Serpico was asked, should the police department appoint a commission to investigate itself? And Serpico said, I don't see how the police department can investigate itself. You know, I don't see how. How can the federal government be expected to pass legislation investigating itself? It's not likely to happen. So they're not likely to mention Fannie and Freddie. That's why they didn't. Now, another proposal is called Arrest the Guilty. When Charles Ferguson won the Oscar for Inside Job, he stated that he was outraged that there have been no arrests so far of any of the guilty people in this debacle. And whether we should arrest people or not is not my central concern. Personally, because it's difficult to know whether much of what they did was probably legal, but nonetheless extremely harmful. But real question somebody should have put to Ferguson is, what would he do about Barney Frank? Barney Frank, by the way, is portrayed as a hero in Inside Job. He's literally shown addressing the camera, having the temerity to say that he doesn't believe in securitization, that it's very dangerous. Now, securitization is simply the sale of mortgages, packaging them as securities and selling them to somebody else. That's exactly what Fannie and Freddie was doing. They were buying securities, which had been mortgages, either outright or in securitized form. For Barney Frank to be knocking securitization would be like Bernie Madoff knocking Ponzi schemes. And yet, he's a hero of inside job. By the way, I asked Ferguson about this, and hoping to embarrass him a little bit. So should we arrest Barney Frank? Because Barney Frank, for example, sent a letter to President George W. Bush in June 2004, one of Bush's better moments, when he was trying to rein in Fannie and Freddie, saying the proposed crackdown on Fannie and Freddie could weaken affordable housing performance by emphasizing only safety and soundness. Safety and soundness are the enemies of Barney Frank. Should we arrest him? Well, maybe we should, but maybe we should get on with the business at hand, which is try to think of a radical solution to what happened by bringing losses back to the profit and loss system and bringing back the banker we love to hate. And here's my brief outline for radical reform. It's reform, it's not revolutionary. I begin with saying that we require that the interest rate on federal funds be fixed in accordance with the Taylor law formula. Now, I, being a truly firebrand radical, believe that the Federal Reserve shouldn't exist at all, that I would rather see government running the shoe business than running our interest rate and money supply and credit business, or having the enormous influence that it does in this business. But short of that, I don't think I'm going to get in my way in that regard. Short of that, the Taylor law, which at least dictates that with some modifications, that the federal funds rate be above the rate of inflation, that's at least a big step forward, and the Taylor law was respected, actually, for a number of years through the 90s. So we can bring that back and simply say that the Federal Reserve should obey the Taylor law. And by the way, it would mean that the federal funds rate should be higher than it is today. So that's one thing about reforming the Federal Reserve in some radical way. Remove discretion from the walk-on-water chairman like Greenspan and his acolyte, Ben Bernanke. The second one is, I guess, even more shocking. Abolish deposit insurance, replacing it with a form of postal savings accounts. Now, I use that quaint term, postal savings accounts, because before deposit insurance, there was a way for poor people to protect up to about $1,000 in banks through what was called postal savings. But really, it was really that the post office took the money and invested it in treasury bills. So all the banks should be told is the following. You want your customers to be insured, arrange insurance plans for them. But we haven't abolished treasury bills yet. There are many of them. There are, more intermediate treasury notes. And so you should encourage your customers, if they want their accounts insured, then tell them that you're going to back them with treasury notes and bills. That's all. Then we have all the protection you want. And we take away, because nobody's going to do it to the tune of $40, $50 million, we take away those CDRs, and we expose the banks to the risk that they could lose their customers if they act imprudently, and we encourage the banker we love to hate to get on top. So abolish deposit insurance. It won't even be that shocking. Just we have treasury bills. Put your money there in that bank. The bank will insure it that way, unless, of course, you want to buy some kind of private insurance plan. Then third, which has to do with the prevention, with undoing the regulation that prevents hedge funds and private equity investors and other financial institutions from owning concentrated shares in banks. I think that if these regulations were lifted, it would probably happen pretty quickly, because it's exactly the sort of thing that hedge funds and private equity investors would be interested in investing in. A few of them might own 5 to 10% shares. They have dinner together every month, and they review how's the investment going. They have more activist management of these financial institutions. So lift that regulation. And then abolish government involvement in the mortgage market. Now that means that you completely wipe out, you phase out Fannie and Freddie, you phase out the Federal Housing Authority. HUD doesn't really have to exist anymore. You do away with all federal involvement in housing. And then, by the way, if you want to have an explicit affordable housing policy, then one way of doing it is to directly subsidize home ownership in this way.